Hey folks, Dan Frio here, the rate update, TGIF. It is Friday, January 7th, 2021. Why do I do that? So you guys basically know what day you're watching the video or what day I did the video. So that being said, the jobs report came in today. Disappointing. We're kind of happy with that because so far in the last week, the MBS market has been a bloodbath. So don't go away. We're going to talk about the jobs report, what that's doing to the market, and where mortgage rates open for the day. So don't go away. Okay, so the biggest news out today is jobs, or let's say maybe lack of, or let's say the confusing part of this. So even when I come to you guys and say, hey, this doesn't even make sense to me, watch what all the analysts at CNBC are saying.
Steve, what's the number?
199,000, another big miss here. November revised up to just 249 from 210,000. Private sector jobs were 211, so it looks like we might have lost some government jobs there. Factory, 26,000. Goods producing overall, 54,000, with construction at 22,000. Yeah, government was minus 12. Let's see, average hourly earnings for all private workers, a very strong 0.6%. Again, that's a sign of a tight job market, raising questions about this BLS number or the overall payroll number here. Let's see what else I can tell you. I don't have the unemployment rate. The U6 rate, the broader measure of labor slack, 7.3%, down from 7.7%. I have the Hispanic unemployment rate. I don't have the overall employment. Oh, yeah, wow. The unemployment rate dropping to 3.9% from 4.2%. That suggests, again, the household survey was stronger. I don't have that in front of me. I'll throw it back to you, Becky, and I'll look for some of those household numbers. Black unemployment rate declining to up to 7.1% from 6.5%. The white unemployment rate down to 3.2% from 3.7%. Again, I'm guessing, and I'll come back to you with this, there's, again, a stronger household survey than the payroll survey.
Betsy, this is exactly what you said happened last time. I think you called it super duper weird last time, that breakdown between the two surveys where you saw jobs numbers that were disappointing, but the unemployment number much better than anticipated. Why didn't it catch up this time? What's the difference between those two and how they're kind of compiled that might explain the differences we're seeing here?
Yeah, so I'm looking at the number right now. So just to tell you, 650,000 people became employed. So we had an increase in employment of 650,000 people. How do you do that if you're only adding roughly 200,000 jobs, right? So the math just doesn't add up. So there has to be a couple things going on. One is there's just been a surge in self-employment. And so trying to better understand how much people are creating jobs for themselves rather than waiting for employers to create jobs for them. But sometimes it's also really just a matter of we're surveying two different populations, and it's not perfect information, right? It is our best evaluation of the data through a sample. And we sample households and we ask them who has a job, and we sample businesses and we ask them how many people are on payroll. We see that when we survey businesses, we get a lot of volatility and we get a lot of corrections in the coming months. So my best guess is we're going to see that employer survey moving closer to the household survey over the next couple of months in the revisions.
Hey, Mike, the market not entirely sure what to do with this. We saw futures pick up by about 35 points for the Dow and then drop back down. I guess the line of thinking that goes into this is that the jobs number was weaker than anticipated, but you've got the household survey telling you another thing, so maybe that's no change for what we can expect from the Fed.
Yeah, it's a confusion type reaction, at least initially. I was looking at Treasury market yields are not really giving up very much, so it goes to that idea that this number, even as a downside miss on the payroll side, on the non-farm payroll side, is not necessarily enough to make people say that somehow the story has changed very much in terms of tight labor markets, two-year note yield not really giving way. You have to let this filter through the markets for a little while before we know that. But at the moment, it seems as if that's what we can expect. The dollar index I did see was softening, and that maybe said people think that it buys the Fed some time. I kind of doubt it's all that relevant in terms of deciding whether the Fed moves in March or not.
Okay, so recapping kind of what all this means, rates going up, guys. Okay, so basically, after you watch and hear all of that, there's a ton of confusion, but the consensus is 2, 3, 4 months from now, things will be back, getting back to as close to normal as we can. What I mean by that is people will be back to work because hopefully all the virus fears are out of the way. At that point, too, it'll be that time of year where even seasonal workers are back. But I think a lot of people during this pandemic also said, hey, I can do this on my own and maybe start their own businesses, which they referred to on the video as well. So that's what I wanted to talk about briefly today. So based on that news that you just heard, and it was a CNBC video that hopefully explained everything to you, let's see where mortgage rates are going for the day. So here's what's going on right now. Hiring has faltered in December as payrolls rise only $199,000, but the unemployment rate fell to 3.9. So how is that possible? Well, it's called the participation rate. So how many people are actually participating in the surveys and everything else? I think there's a flaw in that survey system. It's a system that they've used for years. It probably needs updated. Okay, so that's the first thing I wanted to talk about in that area there. The next thing I want to talk about is it time to fight the Fed? I mentioned this in a YouTube post yesterday that I replied to somebody's comment, and I said, rates are going to go up and other things are going to happen, but I don't think the Fed is going to allow all this to basically tank the markets as well as the housing market, because then we'll get into a depression, and then they've used up a lot of their bullets. There's not a lot of bullets left to fight that fight. So they're going to do everything and anything they can. And we're going to see that unfold here in the next 60, 90 days. So please stay tuned every day so you at least stay abreast of the market, what's going on. So right now, what is the MBS, or where did mortgage rates open for the day? So here's where we're at. So let's go through this real briefly so I can explain it to maybe any newbies out there. The market's open this. This is a post by Mortgage News Daily. It's posted every day. I'd highly suggest you go there, subscribe to it, use it. But I'll put its context in as you're learning this process to make it more easily understood on your end. So you go across here and it says the 30-year fixed. So there's different kind of loans. There's conventional, government, USDA, and so forth. So basically look at it this way. There's different loan types. Those different loan types are conventional loans. That's the normal when you think of just a normal mortgage. Okay, government loans. Those are FHA, VA, and USDA. Okay, now there's what's called non-QM. Those are the bank statement loans and maybe the debt servicing loans and things like that. So if you're an investor, you're self-employed, you're having a little bit of trouble getting qualified for a mortgage, let us know, because we have a program that's called non-QM mortgages. It's not the subprime mortgages of old. It's basically common sense mortgages for those with really good credit that just maybe own their own businesses and have a lot of write-offs and so forth. So that's, just keep that for note. So let's get back to this. So here's what's going on with the 30-year conventional rate right now, open at 347, up 10 basis points, meaning it's up 0.10. Okay, so that's what that means. Going across the 15 years at 2.75, up 6 basis points. FHA/VA is 305, up 7 basis points. The jumbo is 325, up 3 basis points. And the 5-year ARM is at 3.8, up 1 basis point. Look at across the bottom right here. This will give you the 52-week highs and lows. We had a low in the last year of 2.75. The high is we just hit it. And you can go across here and we're damn close, or darn close, sorry about that language, of being at the 1-year highs on everything. I told you, and everybody's like, no, the Fed, you're fear mongering and the Fed's not going to do. Guys, it's happening. So, please be cognizant of that. The next thing is what's going on because of the report that was just out, what's going on with the MBS market. Let's refresh this. It is down 38. You can see just from where we were at the beginning of the week versus now, it is a big move, okay? And I don't know where this is going to settle. I think it is a little overblown because it was too big of a move too fast. So we've locked everybody in, but because we want to protect everybody against this, but I still think we're going to hit a bottom here shortly and recover a little bit. I'm happy if everything just stagnates at this point. So that's where that's at. There is anybody that's out there that's looking to buy or refinance a second home, please do it now, please, because the rates are going to go up. So FHFA, they govern all the, basically the Fannie Mae and Freddie Mac, okay? They're coming in saying we're raising our hits to rates on second homes, okay? And they're going to increase. They're not going to be 1.1 to 3.8. They're going to increase additionally by at least 1.125 to 3.875. So let's say, for example, the rate today is 3. You could potentially be at 6.875. Okay, so that's kind of nuts. So if you have anything to do with a second home at this time, you're contemplating buying or refinancing, I would highly suggest you do that now. So that is my market report for today, this morning. If you're in the process right now, you're in a forbearance, please reach out to us. I can't beg you enough to get all of your options. Don't entrust your mortgage company to put you into the right program. There's 20 state attorneys that are actually suing companies because of this. They're not giving clients options, and this is going to be a mess. Okay, but if you're out there, if you're in the process right now of a mortgage, you're not locked in, let me know. If you're locked in, let me know. Let me know what you're getting offered. Somebody said, "Oh, why don't you do things a little more ethical?" All I'm trying to do is say, "Hey, I'm just trying to help you." Most people are giddy if they can save 10% on a bill. What if we can save you tens of thousands of dollars? So that's all I'm asking. So if you want us to review your loan estimate, so what happens is when you apply for a mortgage within 3 days, the lender has to send you a loan estimate. That'll tell you if your rate is locked, what the rate is, what the loan amount is, what the house value is, and all your fees. That's all I want from you. There's no social security number, birth dates, anything of that sort. So there's no information on there that'll compromise you. So what we do is we are now the largest mortgage brokerage in the country.
Yeah, baby. Yeah.
We're going to scan your criteria to basically almost every lender in the country to find out, are you getting truly the best rate? Okay, so that's what we're doing at this time. So I'd love for you to reach out to us. If you have that loan estimate, you want to send it to us, send it to LEreview@therateupdate.com. LE means loan estimate. So LE review, singular, @therateupdate.com. Otherwise, if you'd like to reach out to us to apply for a loan, see what, kick the tire, see what you might qualify for, please, there's 3 options to do this. You can give us a call at 1-844-775-5626, or schedule a meeting, or click the apply now button, and you're on your way. Thanks so much for watching, guys. I'll be back later today. God bless. Don't forget to give me a thumbs up. We hit 19,000 subscribers last night. You guys helped us. Let's see if we can get to 20,000 this month. So please share my videos. Give me a thumbs up. That everything helps us reach out to more and more people. So God bless. I'll see you later today.